Confident Asset Management, joining us. Aishwarya, so good to have you back. Quite a big gap that we started up with yesterday, but today we're seeing a consolidation. How do you see the geopolitical tensions impact on the markets to go ahead? Can we say that the worst is behind us?
Good morning and good morning to all the viewers. Nice to be back here. Obviously, a lot has happened in the last 1 or 2 months. And I would say yesterday was kind of a ceasefire on the trade talks, like what we saw the ceasefire between in the subcontinent 2 days back. And I think that is what market is rejoicing. But what is more important is, there is a kind of a risk on sentiment which is building up globally, right? Obviously, the one of the biggest impediment was the trade issues which kind of been getting resolved. I won't say there's been resolved. There's kind of a truce which has been reached, and that's kind of a risk on sentiment which is now prevailing globally. So the risk of US getting into recession is now getting lower. Like there's from 45 to 50% probability that has gone down to almost 25 to 30% probability. And that's why we witnessed, IT as a pack roaring yesterday with almost an index at 6% higher. But we understand this is a truce for 90 days. There will be shares of ups and downs and announcements and tweets and whatnot. And market will have to take that into consideration. Back home, though we are at a ceasefire, but that we are not completely saying that it's completely over. We will see more of, possible intervention from either side and things like that, which will bring volatility to the market. So these are the two major events which possibly will provide more visibility about how the market will look like. But when coming to fundamentals, what thing has really worked in the last, I would say, month or two, in all sort of those broha is how our quarterly results pan out for this quarter, right? We are almost 2/3 of the companies have reported the numbers so far, and the outcome is pretty nice. So if you look at Nifty 50 companies which are reported so far, they have been reporting almost 5% kind of an earning year-on-year growth. But when you go deep down in the broader market, if I look at for BSE 500 companies or small cap, that number is inching higher to 8-9%. So if you remember that the number we always talk about, the earning growth of say 10% for this financial year and 14-15% for the next financial year, that is not sharply been revised downward, which was the fear possibly 3-4 months back. So the kind of is some kind, I won't say things are really improving, but they are not deteriorating further. That has been the reason possibly that when we saw that FI by money in the last 2 months, we have clocked in or close to $3 billion, is possibly a kind of reprise that they are witnessing. And this should give some sort of solidification to the market from here onwards, especially in the broader market, for markets to do well. So let's see how all these geopolitical things move through. There is a lot always happening, but I think market has been shown a lot of maturity in the last 2 months.
Okay. Aishwarya, we are just 5% away from the lifetime highs. So do you expect this year is the year where we can actually reach the lifetime highs and even go beyond it?
That is, I would say, more like, a formality if their FIs flows continue, because see, they have been selling huge amount and they have not even bought 5% of what they have sold so far. And if you look at the mutual fund data which came for April, I would say they are also not very bad from that perspective, decent set of data. So if that things comes in place with FI continue to see buying, and if our businesses growth sees improvement, Nifty heading coming back to all-time high might be a formality. But what is really important for us to understand is that broader market is still far, far away from where it was. Even if you see when market started tumbling big way in December, Nifty was at close to 24,000, 24,000 kind of number. As Nifty has easily crossed past, so YTD we are sitting on good positive number, but that not the case for the mid caps and the small cap. The small cap index close to 18,000 is still struggling around 15,500. So they're still far away from those levels. And that is where, I see a lot of these individual clients' portfolios, they're not seeing that kind of gain, even despite Nifty touching 25,000 there. So obviously on Nifty side, we might be there, but we are still far away, Louisa, from the broader market to come back to where they were at least 6 months down the line.
But yeah, how are you finding the valuations of the markets at the current juncture compared to the earnings we've had so far? Do you still believe that we are at an expensive valuations at this point of time?
I believe valuations are reasonable. I won't say they're very, very expensive. There's some segments, the mid cap as a segment is probably trading at 30-35% premium to large cap. That segment is pretty, pretty expensive. But when I look at the, as you said, on valuations and growth, what we have witnessed and what is the expectation going forward for FY 26-27, Nifty is trading at roughly around 19 times FY 27. FY 26, we are close to 21 times. So we are not cheap, but we are there that, it can make a case for healthy compounding if someone invest here. Small cap is an area where we are seeing, obviously, it's still a 10% premium to large cap. If you look at the last 5-10 years of historical track record, but there are pockets where we are seeing the growth is much faster compared to what derating that we have witnessed, right? And that some segment, where I believe there is more opportunity from risk reward perspective on valuations, where investors can go and put their money. Mid cap is what we are staying away for timing. I think valuations are very punchy over there.
Okay, okay. Aishwarya, I want to understand, given that the tariff uncertainty we had between US and China, and now that is already out, do you see any impact of flows into India as well, given that, both of the countries have vowed to reduce down the tariffs at this point of time?
So obviously, whenever there's a risk on sentiment or whatever is happening, it is a win-win situation for majority of the emerging markets, and India has been seen as a big beneficiary of the whole thing. But we should not forget, a lot of this money was finding its place in China before all this trade and things started. I have some fear that that money will start again chasing China once they have more clarity on trade side. So we obviously will have some ripple effect and some inflows into the market, but from valuation perspective, China is very, very attractive compared to India, right? And there's a lot of talk about this China plus one and shifting of manufacturing base and everything and all the narrative and the story around it. In short, it will take a lot of time. Even both India and other counterparts who want to shift capacity and manufacturing here, it can't be done in a jiffy. So all of that will take time. The narrative is building for India, but I will be surprised. I will not be surprised to see if some money start again moving back to China after this. So China possibly will be a bigger major beneficiary in the short term. India will possibly get the benefit in medium term to long term. The flow that we have witnessed in the last 1 or 2 months, I believe there's only two reasons. First is some sort of softening of dollars. We have seen, DXY index coming from almost 113, 14 to close to 100. And then we saw some improvement in currency and things like that, especially for India. And India was seen as kind of an oasis in the turmoil globally. But lately, we have seen that the geopolitical scenario erupted here. So I will be more watchful about the data moving across, the money moving across emerging markets. India should get its share of pie, but we can't rule out China, please.
Okay, okay. Aishwarya, I want to understand about the pharma stocks because yesterday we saw, the pharma stocks were under pressure, but today they have been, they're back in action after Trump's announcement of slashing prescription drugs by about 59% or so. So do you believe that this is not going to, least impact the pharma stocks given that India has always been a generics exporter to the US markets, or how do you see this to pan out?
So I think everybody in the market globally know how Trump works and what's his thought process. So it's very difficult to tell whether he is trying to really mean it or it is kind of rhetorics. Because to see it on the ground, I believe what he's trying to talk around is not doable easily. Right? A lot of these companies will find it legal ways to fight it out, and we are talking about something which we have to understand is more to do rather than manufacturing. It is more to do with distribution issues, and that is the place where he should try to hit it. And we all know that in US there is 4 or 5 distributors who is majority of 75 to 80% of the whole distribution pie, and that is the people who are trying to take the calls, right? When you talk about those companies who have been spending on R&D, who have been doing models of investment, they possibly will take a backseat if their profitability or their cash flows are hit. And coming back to India Pharma is basically to generics. So to us to be get impacted, generic segment in US has to be get impacted, which will be a second stage once the main innovators are getting impacted. So it's a long drawn process, and I believe I'm not expecting too much to happen. Possibly that in some point of time, some negotiation here or there, and they will again will see a rebuttal from US side. So I believe we are sweetly placed from a pharma space in India. We should be watch out because the price erosion has already been happening in US for the last 4 5 years, and this is another level of price cut which has been talked to. This is like trying to create a pie in the sky kind of a scenario. It's not very easy to do. So what kind of recovery we are seeing in pharma today is possibly that reality acceptance that it is easier said than done, and that's why we are seeing that kind of it. I would be more excited to look out into opportunities in the pharma space, if not US exposure pharma, even say IPM based or CDMO, CRO, that sweet space, which will be a beneficiary of irrespective of what happens on in the US innovators and drug companies on the pricing side. So I think this is more of an opportunity to me to rather than running away from.
Okay, okay. And how are you positioned on IT stocks right now? Because we are seeing that the tariff, the trade deal between US and China has been announced, and the tariff uncertainty is out of the way. How do you see the entire perspective? Do you change your perspective on the IT pocket at this point of time, given that there was a little bit of conservatism that was coming in before the Q4 results?
Yeah, so even there has been a conservatism on the IT outlook, and the quarterly results of some of the large IT pack was not heartening. So it was pretty disappointing. But when we went through, in finer details, we realized that possibly the way people were writing obituary about the IT sector as a space was, I think, unfounded. A lot of these mid and small IT companies, even the couple of the large IT companies, have done reasonably well. When you look at the deal pipeline, things are, not that alarming. Obviously, the way US has been talking about rates and the recession fear is what was the worry for ITSA pack. And as I said, the probability of recession in US is getting down with more truths happening and more sensible trade talks happening globally there. So now we are pretty constructive on ITSA space. There are sectors, there are companies which have been doing relatively well. They are seeing their deal pipeline going up. Currency has been a kind of blessing in disguise for the IT sector per se. So we are constructively being positive on IT. Now we have actually gone overweight on IT in the last month or so, given the way the opportunity prevailed in the sector. And we are sticking with the names which are showing more resilience in growth. So I believe IT is possibly will be a difficult one, but it could be blessing in disguise how things play out in the global pie over there. And on valuation side, obviously the IT sector is not very cheap, especially mid and small cap. But when we look at in conjunction with growth, there is some cases of where money could be allocated in IT, and we are putting our money.
Okay, okay. All right. With that, we have to let you go, Aishwarya. But thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovis. Thank you so much.
All right. All right, let's take a quick check of the markets because we were in deep in the red at this point of time, and Sensex is down about 800 points, 700 points, so to say, 750 points. That is where Sensex is at. Nifty is also down about nearly 200 points. 0.7% cut coming in for the Nifty 50 index below that 24,750 mark that we saw. So from 24,900 we have come down to 24,750, below that 24,750 mark as well. If you look at some of the sectoral indices which is not contributing to the Nifty's upside, that includes the likes of Nifty IT index, are seeing a cut of about 1.2%. Other than that, we can see Nifty Auto Index, Bank Nifty, all of them on the losing end at this point of time. The only sector which is shining in the trade today, that is your Nifty Pharma Index with about 1.7% of gains, and Nifty PSU Banks also doing well at this point of time with about 1.5% gains coming in for the Nifty PSU Banks. On the other hand, if you look at the broader end of the markets, mid caps and small caps, both of them are outperforming at this point of time. Small caps definitely with a larger set of gains, with about 0.5% gains coming in for the small cap indices. On the other hand, if you look at the top gainers on the Nifty 50, majority of the pharma index, pharma stocks have been dominating the pack, be the likes of Dr. Reddy's, Sun Pharma, Cipla, all of them seeing a gain of about 1 to 3% or so. So yes, pharma index helping offset any of the loss that is we are seeing in the market, but otherwise a very negative trend, so to speak, for the markets today. But with that, we've come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for Closing Bell, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.